Weekend. We actually out, yeah, and I also have a bunch of stuff to do today. I have going out of town for NAREB's national conference tomorrow, and of course, I haven't packed or gotten any of the outfits I'm supposed to get for the events. So here, I'm gonna go ahead and just mute you guys. All right, so we're gonna start off with the basic news, and then we'll jump into pre-foreclosure listings and stuff like that. But first off, Hometown Heroes is down to 50 million in the first month, so gone. Half of the money is completely gone. So I kind of want to talk to you guys about seeking alternatives. I know that a lot of you have been pushing it, and it's been bringing in a lot of leads for you. It has for us. It doesn't stop there. The Florida bond just as good when it comes to down payment assistance. The guidelines are very similar to Hometown Heroes. They give you $10,000. They don't give you 5%. Usually the difference is on average, Hometown Heroes, if you're doing an FHA, the cash to close is about $7,000. On Florida bond, it may be about 11 or 12. So the difference is usually about $5,000 on that normal purchase price area of about 350, 400. Now, obviously, if you're looking at the higher price points, 5, 6, 7, they're probably going to need closer to maybe 16, 17,000 at that point. But for the most part, on standard, I would say about 400,000. You're probably going to need an extra $5,000 if you're the buyer, which when you consider that, right, the people that don't really understand the Florida bond or were really looking to use Hometown Heroes once those funds are gone are going to be out of the market almost instantly, right? Because they're going to be putting in offers. Then those loan officers are going to try to get those funds, realize that there is no funds. And now, hey, sorry, you were pre-approved. Now you need to find money. Those people are probably not going to do that, right? So that the I guess the push that we're seeing here in July and the push that we're going to see in August is going to slow down drastically. Probably I would say at about by October, September, October. So you want to kind of already prep your clients to worst case scenario. And if that slows down, those listings that are up, you're going to be able to negotiate that extra 5 that you're going to need for your client anyway, right? That extra 5 or 6 from this from the seller in order to make the deal work. Still going to be able to close up the gap. So don't worry too much about Hometown Heroes being gone. There are alternatives. And we'll be able to still get those deals done. And Florida bond does not run out of money. So that's a good thing. So now in terms of the news from last week, we know that the Fed has now hiked their Fed funds rate another 25 basis points up to 5.5. But we did get good news that countered the bad news. And that was that PCE, which is personal consumption expenditure. Personal consumption expenditure, which is the Fed's favorite measure of inflation, decreased from 3.8% to 3% year over year. At this rate, we're going to get to that 2% number much faster than anybody expected. To be honest with you, the Fed Chairman Jerome Powell thinks we won't get to 2% inflation till 2025. I mean, if we're already at 3% and their number is 2%, I don't see how we're going to take another year and a half to get there, but we'll see. Pending home sales, which measures contracts on existing homes, came in at 0.3% month over month, and we're down 15.6% year over year. That's normal, guys. Remember that these are for home sellers that are probably sitting on 3% interest rates, and this number will most likely get better as interest rates come down towards the end of this year, maybe beginning of next year at this point. And more home sellers feel like they'll be able to sell their homes because right now, if you're at a 3, unless you really, really have to, and we talked about this before, right? Sellers right now, they're not selling unless there is a real reason for them to sell because of relocation purposes and stuff like that. And it's going to be much easier for them to take a 4.5 or even a 5% in the next couple of years if they're trying to upsize or whatever the case is, as opposed to taking a 6.5 right now. New home sales, which measures contracts on new construction homes, was down 2.5% month over month, but those are still up 23.8% year over year, which is the new construction homes. And the reason is because they've started building again and taking on new contracts and things like that, which we talk about in our NAHB home price index. And then lastly, I know that Carl, you got a question, so I'm gonna get to this last point here, which is the Case-Shiller home price index, which is in for May, is basically our favorite measure of price home price appreciation, right? That's what I use the most here because it's typically the most accurate. It does show home prices went up 0.7% month over month, but they're down 0.5% year over year. 0.5%, not 5%. The cities with the highest appreciation year over year, and I think this is the first time that I don't see Miami as a city on the home price appreciation index for Case-Shiller since 2021, I think. But first place was Chicago with 4.6%, Charlotte at 3.9%, and to me, a very surprising city, New York at 3.5%, only because New York is already extremely overpriced. Carl, you had a question?
Yeah, my question was about the Florida bond. Um, Said that the criteria is pretty much the same as hometown heroes. So they need a 640 to qualify and to lose their job. Is that correct?
Yeah, so the 640 minimum FICO. It's a bond, so they have to get it is a hometown not hometown household income. Okay, that's going to be the biggest difference that we're going to see. Is basically the income limits are a little bit lower. So instead of them being 144 in Broward, it's about like 110, I think, is the max for the household income, which is including husband, wife, and anybody that works that is above the age of 18. That would be the biggest difference that we're going to see. However, the benefit is that if they have a cosigner, that cosigner's income is not used in the calculation for the household income. So if you make $80,000 and then you have a cosigner, mom or dad, that they make 150, that 150 is not going to count towards your household income on the Florida bond. So there's still going to be creative ways to get the deals done, and utilize cosigners if we need to in order to get those pre-approvals up. But yeah, the toughest part is going to be married couples that may make $70,000 together, 70. Those are going to be the hardest ones to kind of get around, because if you're married, I still have to show the income from the spouse. But we'll still be able to get around it if we have like a cosigner and you're not, let's say you're not married, you have a cosigner, put them on there and still be able to use that person's income and not actually hit you for it. So the hardest part is going to be that, trying to make sure that we stay below those income limits of about I think it's like 105 to 110 in Broward. But other than that, we should be fine. 640 FICO, first time home buyer. And then we do need to get 3 years tax returns on the Florida bond.
Thank you, sir.
No problem. Okay, so for those of you guys that have, there may today, from what I saw, maybe only like one or two of you guys that have seen this presentation before. If you guys want to go ahead and head out, you guys can. I'm going to kind of not do it as in depth as I did the last time, because I want to make sure that we stay within time frame. But doesn't mean that if you guys have questions, not to ask away, because this is one of my favorite presentations that I did. This is what I used to do as a realtor. So I speak from experience when I kind of go over this, and I literally give you guys the same steps that I did when I did it. Things may have changed because this was 5, 6, 7 years ago. So if they did, you guys have a better like system or anything like that you use, feel free to put it in the chat so that everybody else is aware. Like things like tracking down phone numbers for people. I was using White Pages 5, 6 years ago. I'm pretty sure there's way better systems out right now that are just as inexpensive. So things like that, just go ahead and put in the chat any questions that you guys have. Don't hesitate to ask. But right now, foreclosures are not what you guys, because I know that you guys don't think that, but what a lot of people think is going to be 07, 08. We're going to see foreclosures start to come into the market in general, because everything that was stopped with COVID basically has already, the time has already expired, right? So those grace periods that a lot of these sellers had, or a lot of these homeowners had, are no longer there. And so those foreclosure processes that were started back in like 2019, 2020 that were held up are restarting again. We're not going to see a huge increase because a lot of people do have equity in their homes, but we will see that uptick, and we'll see them start to come into the market. So this is going to actually be very important for you if you want to start to go towards pre-foreclosure listing. So a couple of things we're going to talk about is what is a lis pendens, how to find them, how and who to contact, and what you're supposed to say, right? Which is going to be probably the most important thing because people are going through their toughest time that they probably have ever been through, right? Losing your house is not easy. Bit of a warning here. This is work. It takes consistency. It takes a lot of no's, empathy, frustration, and all of the above. Do not take the bad conversations personal. Remember that these people are going through real problems. And so in order for you to do this, you really need to care about your job and really be trying to help these people, because if you're bullshitting them, they're going to smell it from a mile away and you will not be successful at doing this. This takes real patience here. So lis pendens. A lis pendens is a pending legal action or a formal notice of this. A lis pendens can be anything. It's not just a foreclosure. So when you're looking at these documents, which we're going to go over, you need to make sure that on that document it says that this is a notice to foreclose on a note or mortgage. Okay. How to find them? Google. All right. Miami-Dade lis pendens, Broward County lis pendens. You can do the county auction websites, which is miamidade.realforeclose.com and broward.realforeclose.com. You can sign up there on those two websites. I'm not signed up on them. I don't need to be. You guys can, and you guys can see those homes that are already going to be going up for auction. So before we jump into the next page, the reason why you would do that is those could be very, especially if you have a good book of buyers or a good book of investors in your back pocket, that could be such an easy way to get a listing or to be able to flip a sale before it goes into auction. Because once it's going into auction, that means that home is already, or that bank has already decided we're foreclosing on this property. It's going up for auction August 31st, which means that you have to get a very quick closing, right? You got to get somebody in and out of there, take an offer, and be damn sure that that thing is going to close, because that's what you're promising that homeowner is they're going to get that X amount of money. They're going to be able to pay off the bank, maybe walk away with $5,000, $10,000, maybe not much at that point. But more importantly, not have that foreclosure on their record because they are technically still the owner until that time of auction. Okay. So those will be good ways to kind of get quick listings and quick ways to sell. I know a realtor that does that. Any sites for Palm Beach, probably same thing. You'd probably just Google Palm Beach lis pendens because this is all public record, Gina. So it would probably be pretty much the same process. And so the tools that you'll use would be the county websites, which is the Miami-Dade or Broward lis pendens or Palm Beach lis pendens, RPR, which you guys have on your MLS, Realist, which you guys also have on your MLS, the property search, the county property search websites. If you're doing Palm Beach, Broward, or Miami-Dade, those are the ones that you'll use. White Pages, which is what I use, but you can have any sort of other person tracking website, and then sign up for Miami-Dade and Broward auction. So if you're going to do Broward County, right, we would come here, Google Broward County lis pendens, official record search. You would do, I like Broward County. It's a little bit more organized than Miami-Dade's, to be honest. So that's the one that I'm going to show you guys. You click here, search records, right? You go to document type because we're looking for the documents that say lis pendens. All right, and here it is. All right, and then you just got to fix the date. So we'll do all of July. Before, when I used to do this, I'm not kidding, every day I would have 20, 30 people to call. That may not be the same thing now. Right now, you may not have that much. Let's see. So from all of July here, we've got about 3 pages, 100 people per page. So yeah, you're talking about on average about what, 3 people per day are added onto this list, give or take. Okay, and so the first thing that you want to look at is look at the person who's suing or the company that's suing. Associations, I never went after them. I can't tell you from experience if those work or not. Basically, association suing homeowners is usually typically because that homeowner is behind on their association dues and do not plan on catching up. Now, there are programs that are typically city or county based that they can help you out of it. I know Miami-Dade has one as well. If you're behind on your association dues or anything like that, for whatever reason, they actually help you catch up. But I'm not sure of one in Broward. I went for specifically people that were delinquent on their mortgages. So we'll look at this one. Typically, this looks like an actual company. MCLP Asset Company suing Santos Rodriguez. notice of list pendants. So we'll push this, make this bigger. And then it says here, you're hereby notified of the institution of this act by the plaintiff against you seeking to foreclose a note and mortgage encumbering the following described real property. So sometimes it doesn't give you the address. This is usually much, much better because now you actually have the address. You don't have to kind of backtrack and look at the lot and block or go through the person's name and try to find them on Broward County who owns, right? What Santos Rodriguez am I looking for? Because if it doesn't have the address, you do have to kind of reverse engineer it, right? Either Googling that legal description or going on to Broward County, in this case, Broward County's property search and searching up that person's name and then looking to see what subdivision that property is in. But this is pretty easy. You're able to get that address there. And then through that address, you're going to hook it up to RPR and to Realist. Why? RPR typically tells you, and it's not 100%, but at least gives you an idea if that person took out a mortgage and when they did, around what time. And so you can kind of backtrack more or less to see, kind of eyeball if they are delinquent, how much they actually owe compared to the mortgage that they took out, and so on and so forth. So it gives you a little bit of an idea. More so, I did it because I like to have an educated conversation with the seller where I know more or less the questions that I'm already kind of asking them preliminary, because I've already kind of seen that on public record for the most part, right? You don't necessarily have to do RPR or Realist. You can get that address, paste it, get that person's phone number and just start pounding the phones. It's going to be much, much quicker. I just like to have some notes and research on that person so that way when I'm talking to them, I know more or less, at least a little bit. I'm not going to know everything, but RPR and Realist are really good with giving you that information. Okay, so I'll typically do that. I would skip this association, move on to this one, even though this is suing another LLC, just to kind of look into it. This is probably going to be another foreclosure and list pendants, NationStar directly to an owner seeking to foreclose a mortgage. You see, okay, so this does also have the property address. So these are perfect to pick up those phone calls and call them, right? Once you track your notes and everything through RPR, through Realist, and you already have, if you're going to write note, what your notes are when they took out that mortgage, when they bought that property, if they've been through that process before, which is something else that RPR shows you, if they started that process in the past, what that looked like for them. And so that way, you know, if they've already done it before, they kind of already know the process of doing it, which is really what you're there for, right? You're essentially, if you're, or at least when I did this, I was more so advising the person through the process, more so than I was asking to get the listing, because more times than not, they're not going to be able to keep their home, right? And we're going to kind of go over why here a little bit shortly, but so you know that upfront kind of going into it. And if they do, great. If you're there to help them go through that loan modification process and help them save their home, they're going to refer everybody that they know to you anyway, right? And so you're going to get a bunch of leads from that one person, and that person is going to be your client forever, for life. You help them save their property. And so now anybody that's looking to purchase or sell their home, they're going to go directly to you. Okay. So what are you looking for? Foreclosure list pendants from the company to owner, which I just showed you guys. And then info on what current situation is. Has it been listed for sale already, right? Has it happened in the past? What type of mortgage could they have? Write your notes, look up the lead online and prep for the phone call that you're going to have with them. And before, how to get in contact, right? White pages search, which is what I used, which was pretty cheap. And and then also any other tracking or any other tracking site, whatever you guys use. I think you guys most of you guys have systems in place where you're cold calling and you have, those systems that already can track people's information. What to say before we find out what we need to say or how to have a conversation. We need to know what different options the client has, right? You can't just go into a blind and say, hey, you're going through, I see that you're going through a pre-foreclosure process. Let me list your home for you, right? That's not going to be a good conversation. So the three things or the three options that typically people have, right? The loan modification. This is what most people will tell you that they're trying to do. Understanding a loan modification will help you guide them in the right direction. Okay. The number one thing you should understand and try to prep for and do some research on is how loan modifications work, how banks typically calculate them, and things like that. Because once you get an idea of that, and you're looking at this client's paperwork, and you're saying, hey, I don't think you're going to get approved for loan modification because of this and this reason. This is how loan modifications work. I'm not an attorney. Talk to an attorney, but from my experience, boom, 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 and this is the way to do it. From that point on, as you follow up and those things start to happen to them, they're like, wow, shit, yeah, Mike was right. He told me that they were going to make me make 2 payments and then they were going to sell my mortgage over to another servicer. Now I have to start again, right? Those things will start to click for them over time. And as you continue to follow up little by little, and then from there is how you're going to kind of build those listings under your belt. Short sale, this is usually what most people will have to do, right? Is do those short sales. And then an outright sale, which means that you have equity. And this is 100% possible in this market. And it would put the seller in the best position because a lot of people do have the equity. So why are you going to let your home get, or why are you going to, get foreclosed on if you have equity and you can outright sell it and get money back, even if it's $5,000, $10,000? So much better than getting that foreclosure on your record. Okay. So we're going to talk about what a loan modification is. A loan modification is a type of loss mitigation that changes your loan terms. Okay. And only about 20% of people get approved. And there's 3 different methods: back pay, which is deferment, interest rate reduction, and extended amortization, which is the one thing that FHA came out with not too long ago when everybody was talking about FHA has 40-year mortgages. And I was telling people, do not listen to those people telling you that. That extended amortization is that. So FHA on the back end, if you are going through foreclosure or through that foreclosure process, and your loan term is for 30 years, they have the option to extend you out to 40 to extend your principal and interest payments. Okay, that's what that 40-year news that came out for FHA was. It's just for people that are struggling to make their mortgage payments and they're trying to go through the loan modification process. Okay, so the 3 methods broken down: back pay or deferment, which is typically more of a short-term solution, 6 to 12 months. And that's typically for job injury or any sort of short-term injury where you can't work, you can't make those payments. You go to the mortgage company and you explain that to them, and they'll do a deferment for you of 6 to 12 months to put that all the way on the back of the loan, and then you'll get that grace period for on-the-job injuries or things like that. That's more so short-term. 2, lower interest rate. The number is usually up to half of the mortgage payment. Okay. So, and we'll talk about that on the next slide, but you're not going to lower your interest rate drastically and basically pay pennies at that point. It's typically anywhere between up to half of what your current mortgage payment is, usually not more than that. Okay, and then the longer loan term is spread from 30 to 40 years. Same thing. They are never going to go more than what half of your principal and interest is, right? And this is directly from attorneys that I've spoken to in the past. And the number that they're usually using is 31% of your monthly gross income, okay? Or the client's monthly gross income, whatever calculations they come up with, which is very important to kind of note as well, right? Because every bank is going to calculate that income differently, especially if it's not straight up, okay? So kind of an example here, right? The person's principal and interest is $2,000 a month, right? The most that principal and interest will decrease is $1,000 a month, right? Because that's half. That's the most. And add into that, if they're escrowed, the taxes and insurance, assume $500 a month. So is 31% within the realm of the $1,500 to $2,500 a month that the bank is going to approve them to pay? If they're 31% within that, okay, you have a good chance. But let's say you don't have a job at all, you're unemployed, or you are on disability, right? And you're not able to get back to work, right? Is that income 31% of what you're going to be receiving within the realm of that number there, right? So when you sit down, when I would sit down with them, these were kind of the numbers that I would run. And I would say, look, this is more or less what you're going to be looking at, right? And of course, this is 100% a baseline, and it does not mean that they will be approved and or denied. Banks can calculate income correctly, or may not want to go all the way down to half of the current principal and interest, right? Just depends on the bank. That's why it's more so, is it possible for you or not, is the conversation you're having with the client, right? It's not this is exactly what's going to happen. No, more or less, this is what typically happens. Your situation could be different because it could. You just don't know. Banks don't typically want to foreclose on the property, so they will try to do what they can to keep it, but ultimately they're not going to just lose money either, right? So 31% is typically that realm. For you, you're actually right around that, right? From the calculation I'm doing, you may be at 29, 30%. You have a good chance. These are the steps that you need to take to fill out that paperwork, right? Or no way. I just don't see it. You're at your debt to income ratio is at 50% right now. I don't think they're going to approve you, right? And this is why. This is the methods that they use. They usually go, these are the three options that you're going to get. And within all those three options, the way that I'm doing these numbers, they just don't add up, right? And so at that point, what's going to happen is you're going to apply. And this happens even if you will be approved for it or not, right? And this is the number one thing that will build trust with your client, because it happens, I would say 8 times out of 10, 9 times out of 10, this happens, okay? The servicer will start the loss mitigation process because they have to. And they're going to say, okay, now you have to make a couple payments in order for us to be able to start the approval process with you. And as soon as that client makes a couple mortgage payments, the mortgage is going to get sold to another servicer, and the client has to restart the process with the new servicer. And this can happen for years while interest continues to be accrued for delinquencies and make it harder for the client to be able to get a loan modification. After a while, the client's going to be like, I'm tired of doing this shit. Like, I've done it 3 or 4 times. And every time I do it, they sell my mortgage and then they stop, they quit. That's when the foreclosure process happens, right? So this one thing will help you build trust, because most of the time it does happen. They're going to start the loss mitigation process. They have to legally. And before they can give an answer as to whether or not that client's approved, that mortgage is sold to another servicer. The client gets a paper in the mail. Hey, now you're making your payments over to Mr. Cooper. Start the loss mitigation process with Mr. Cooper. Mr. Cooper sells it to Caliber or whoever, right? It just goes into a cycle because a lot of these servicers, they don't want to deal with that. They want to collect these payments, make their residual income monthly, and that's it, right? And so as you follow up with them, hey, the person, did they sell your mortgage? Yeah, I told you, see what that was going to happen. Are you going to consider, looking at different options? You want me to help you navigate it through a short sale, see if they'll agree with that and stuff like that. And now you start to, that second or third conversation we'll have with them is much, much easier. Just keep moving forward. I put this quote in here because those conversations, when you first start, I'm telling you, when I first started this, I'm like, I don't know how the hell I'm going to get through this. But it was more so that I had promised myself I'm going to do it for 30 days. And obviously by the end of the first week, it became much, much easier to have these conversations, because I kind of knew what people were looking at. I would hear the same things, right? No, I'm getting a loan modification. No, don't call me, right? Bum, 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 bum. So you start to learn, okay, if they're going to get a loan modification, at least for me, what does that look like? And then that's when I did a lot of research on loan modifications to kind of help them guide me. Because I was like, and you see it when you search online, like only 20% of people get approved for loan modifications. Like, you're either going to be really lucky, 1 out of 5, or you're going to be the 4 out of 5, which is a higher likely case for you. And then at that point, you're going to be stuck, right? The phone calls are usually the toughest in the beginning, but become much, much easier over time. These people are going through a hard time, and they will automatically assume the first thing you want to do is take their home from them. It's important to let them know you're offering them a solution. Usually no one else is calling this early in the process. So most of the time, you're the first phone call that they receive, which is a good thing, right? Because it is true. You're not there to sell them. You're there to advise them, which is why it could be very difficult as a realtor if you're looking to try to get transactions going right away. This is probably not the option for you. You can build a business on it. When I was doing it consistently, I started to ramp up, and I was actually doing a listing a month at the time. That was about 6-7 years ago, when there was much more foreclosures out in the market. Now there's not so many, but you could still be able to build a business and be able to build trust with these clients and have them refer you people over time. No, so it doesn't reset the mortgage again. The servicer purchases the mortgage understanding that that person is behind. But the way that it looks is, yes, this person is behind, but for the last couple of months, they've made on-time payments. So I'm going to take the risk as the servicer, and then the servicer gets the phone call saying, hey, I'm trying to start the process for um, loan modification. And so they would say, okay, in order for you, that's just part of the process, is that that person does, that servicer does have to have them make 2 on-time payments. When you're doing that, you're selling that servicing over to someone else, and they purchase it. It's, you kind of have to restart. The client restarts the loan modification with the new servicer, because the old servicer already sold the mortgage. They're not responsible for that. So that paperwork doesn't get carried over like that, right? It's just the mortgage that gets carried over. That's it. No problem. So phone call. Okay, the first thing is confirm they are who you are trying to call. Obviously, hey, is this what was that guy's name? Carlos something, Santos or something like Santos Rodriguez. Confirm they are who you are trying to call. Introduce yourself. I'm Mike. I'm with Element. I'm with EXP. I'm with Elite. Whoever. Let them know you understand that the mortgage company filed a list pendants to start the foreclosure process. Ask them if they thought of what they plan to do. All right. Do they think that they can keep the home through a modification, or have they been denied for one? So I would always open up with, hey, I see that the bank put a list pendants on your home, or put a list pendants within the courthouse to start the foreclosure process on your home. Have you already thought of a plan to do? Are you going to be considering a loan modification? I got to the point where I would push that conversation first, right? Only because the reception that I would receive if I didn't do that was already the fact that they were saying that they were going to do a loan modification. So I kind of threw it out there more so as bait. And so that they didn't automatically assume that I'm going to, it's better to me say, are you going to do a modification, or as opposed to saying, are you thinking of listing your house, right? This person's going through pre-foreclosure process. That list pendants was literally just posted to the courthouse maybe a week before it was recorded and you saw it. So it's very fresh to them. And I think that conversation of, are you going to go through that loan modification, at least for me, was much better than, are you thinking of listing your house, right? Talk to them about the 3 different options that they have, which is a loan modification, short sale, or outright sale. And come off more as a consultant for them, right? I'll be interested in looking at your paperwork with you if you want to come by my office, which is what I did. And I would literally sit down, bring me all the paperwork that you have on the past loan modifications that you did, on the current one, what your current mortgage is, how much you owe, how much you're behind, all of that stuff. And I would look at it, and I would see, okay, you're behind, you owe $350,000. Your property is only worth 300, right? The loan modification has nothing to do with what you're upside down on. So I don't want you guys to think that. It's more so, can they make the payment? If we do a loan modification, is that really going to help the client catch up on their payments? And if the answer is no, then that's when you say, look, the loan modification is not going to work for you because you just don't make enough money, or you're not showing that you make enough money on paper. And so because of that, the bank is going to start the foreclosure process. And because of that, you're going to have to do a short sale because you're upside down on this property, right? And so it kind of goes one by one by one by one. You can opt to review their paperwork with them and schedule a meeting with them. No matter what, the key is in the follow-up. You're most of the time, and this is with everything, you guys already know this, right? You're not going to get, very rare that you get the yes right up front, where you call somebody and say, hey, I know that you're going through the pre-foreclosure process. I was actually going to list my property. I'm tired of this shit. My kids moved out 5 years ago. I don't know what I'm still doing in here. Me and my wife are going to get a divorce anyway soon. And that's what I'm planning to do. Okay, perfect. I'm the person for you, right? That conversation is probably going to happen once out of like 50 to 100 phone calls that you make. It just doesn't happen that often. The key is in the follow-up. Most of the time, people have emotional attachments to their property, right? Has nothing to do with anything else except, I've been living here for 20 years. The bank is not going to take my house from me. And that's the way that they look at it. And so it's just trying to get that emotional attachment away and just be realistic. And the way to do that for me is with the numbers, which is probably why I'm so good at being a loan officer, because I look at everything analytically, right? And that's the way that I did it. You guys can have a different way to do look at these pre-foreclosure listings, but for the most part, I would just do the numbers. These are the numbers. This is the way that it works. Because I've done this research, I've read a bunch of books on this, and I don't think you qualify for it. But you want to try it, go ahead and try it. I'll follow up with you when everything that I say comes to lie and becomes true, then in 2-3 months, we'll list your property when you're already behind another $10,000-$15,000, right? Tips/disclaimers, these are usually untapped leads. Most of them will eventually send you a deal if you continue to follow up with them and help them, and they will remember you forever. If they do go through that loan modification, if you look at the paperwork and you say, oh, I think a loan modification actually will work for you, you're right in line with what banks typically look at, which is at 31% gross, gross monthly income, and they don't even have to reduce your interest rate. They just need to spread you out 10 years, which is typically the most used option, where they'll send that amortization out to 40 years as opposed to 30. And you're right in line because you only took a slight decrease in pay. You might actually may qualify for this. Go ahead and do it. Let me know how it is. You follow up with them. Hey, how's the loan modification process going? Good. I just got approved for it. They sent me all the paperwork. My new payment is this. Perfect. I'm glad it worked out for you. If you know anybody that's looking to purchase or sell their home, you know that they can count on me. You know, I'm going to be completely transparent with them like I was with you. And good luck. That's it. And then, of course, disclaimer, I'm not a lawyer. I didn't go to school for 10 years. I just did a ton of research when I was doing this because I kept getting the same no's, and I was just really stubborn on more or less what I needed to do to convert this. So if you guys do have any questions at all for me, I know that you guys were, Gina was asking them throughout. You guys can unmute now. Okay, stop sharing. Hope you guys liked the presentation. I kind of ran through it a little bit because I wanted to be within the hour. I don't know if you guys have any questions. Gina, you have your hand raised up?
Yes, thank you for your presentation. I had a question about the difference between short sale and regular sale. What is the difference if they're at that same starting point when they just got the notification? Why would you, what would you suggest, a short sale or a regular sale, and why? Is it a time difference?
No, so short sale sounds like it's a quick sale because it says short sale, but no, a short sale, there's a joke between realtors that a short sale is actually a long sale because it is. There's nothing short about a short sale at all. The definition of a short sale is the fact that the bank is going to be getting less than what is owed on the mortgage because that person has accrued so much back payment, so much interest because of the missed payments that if that house is worth $400,000, that client at that point owes $500,000. They may not get approved for the loan modification. So now the bank has to agree with that person that person is going to sell that home for less than what is owed on the mortgage. So that's what the short sale is. But it is a long process. It's not short at all because you have to actually put the property on the market, get bids for it. From there, you have to send it over to the bank, and the bank is going to take about 3 to 6 months to review, sometimes a little bit quicker, sometimes a little bit longer. And you have that negotiation with the bank as to see if they're going to agree on allowing that homeowner to do a short sale based off of the contracts that they've received. And so that's typically what a short sale is. It's just basically the property's underwater and there's more money owed on that property than what it's actually worth on the market. And then the outright sale is the opposite, right? That they're accruing interest, but they've had so much room over time where they started off at only owing $200,000. Now they owe $300,000 because they've been so late on their payments and they've accrued that interest, but the house is actually still worth $400,000. So, hey, you technically are behind on your mortgage by about $100,000, but you had so much equity, you can still sell this now and still make $100,000 off of it. So that's going to be the difference between the two.
Okay, that was a great explanation. And do you need cash for both?
Well, you could so you could do financing. So when it comes to financing, it's more so what the owner is willing to accept, right? So if the owner says cash only, then that's what you can do. And when you're looking at it in terms of listing it, a lot of times these are cash only because of the condition of the property. Really just it. It doesn't mean that you can't take financing. A bank will finance a short sale, a pre-foreclosure, anything like that. They'll do the financing as long as it's an arm's length transaction, right? You're not trying to bail this person out because they're your family member. And at that point, no. But if this person is going through some sort of pre-foreclosure process, the seller, we don't have any information on the seller. We just know that the buyer is trying to purchase that property. And so does the buyer qualify to purchase the property at that price point? That's typically what they're looking at. As long as everything else is up to par in terms of financing, the roof is intact, right? Safety structure issues is usually the reason that stops the financing process.
Okay, thank you so much.
No problem. You guys have any other questions? No? All right, perfect. Thank you all so much. I'll see you
I
guys.
appreciate it, everything.
No problem. I'll see you guys next week, Monday. I'll be back in town from Houston, I think on Saturday. So we'll still have our Monday Mortgage Minute next week. Okay. See you guys.